Good morning and welcome back to the channel. Today we are focusing on Friday, January 29, 2026. Specifically, we'll forecast gold price movement through the U.S. trading sessions. This analysis combines market data, expert forecasts, technicals, and macro context. Please remember, this is not financial advice. It's a data-driven, probability-focused outlook. Before the U.S. market opens, global prices indicate strong momentum. According to fresh market data, gold prices are trading around $5,480 $5,500 per ounce in global markets early today. Earlier overnight, gold even tested $5,600 per ounce on some spot markets. This comes as investors continue to flock to gold as a safe haven. Geopolitical tensions remain elevated. The U.S. dollar continues to show relative weakness. All these factors support higher gold prices into the U.S. session. Analysts have noted this powerful rally is backed by fundamental drivers in 2026. Major financial institutions have lifted forecasts for gold's trajectory this year. Some banks have even discussed scenarios that gold could reach near $6,000 per ounce this year, under extreme conditions. Again, that's a scenario, not a guaranteed outcome. But it reflects the wide range of expert views out there. The U.S. market opens with gold pricing already elevated. The global lead price sets the tone for the U.S. Open. When the bell strikes at 9:30 a.m., traders will watch spot gold versus futures basis. Futures prices on COMEX suggest strong buying around early levels. Commodities data sources show elevated volume in pre-market trading. Early session strength is likely if Asian and European cues remain bullish. If the U.S. dollar opens softer than expected, gold should spike further. Traders will watch the DXY dollar index reaction at open. A weaker dollar benefits gold prices directly. Safe haven demand is still top of mind for many institutional traders. Central bank buying and ETF inflows continue to create upward pressure. A technical teaching point, breaking above recent highs near $5,500 signals continuation. Yesterday's market showed gold crossing this threshold. If gold holds above that level in early U.S. trading, it could attract momentum buys. If the U.S. dollar strengthens unexpectedly pre-open, gold could soften. Unexpected economic data from Asia could drive early profit-taking. Some technical models show gold overbought at short-term levels. A pullback to support around $5,420 $5,450 could occur. That depends on order flow and sentiment at open. Mid-morning is often driven by U.S. macro updates. Today, traders will be watching sentiment from PMI or manufacturing data. If U.S. growth signals soften, gold may rally further. However, stronger than expected data could reverse some safe haven demand. As gold is priced in dollars, economic surprises can have outsized impacts. A dovish interpretation of any weak data favors gold. A hawkish interpretation can weigh on prices. If macro data falls short of expectations, gold could move up sharply. Continued geopolitical tension might amplify buying pressure. Analysts point to structural demand, not just short-term technical trading. Emerging market central banks are still active buyers. ETF inflows remain supportive. A bullish trend continuation could see gold move above $5,600. If unexpectedly strong U.S. economic signals hit the market, safe haven demand could ease. Traders might rotate into risk assets like equities or USD. This rotation can push gold lower. A downside test near $5,450 could attract buyers looking for dips. Early afternoon often sees technical positioning ahead of economic events. If gold stays above $5,550 early, that becomes psychological support. Traders watch chart patterns like Fibonacci extensions. Momentum and RSI indicators help gauge overbought or oversold levels. Technical traders who missed the early move may enter here. These participants influence price swings mid-session. Breakouts or breakdowns usually occur in this phase. A breakout above short-term resistance near $5,600 could spark another leg up. That's the price point many analysts watch for confirmation. At this point, strong trend traders could add positions. Under this scenario, gold may revisit highs from earlier sessions. If the session fails to sustain above key pivot levels, profit-taking intensifies. Pullbacks toward intraday support could happen. Traders using tight risk limits might trigger stop losses. The close establishes daily sentiment for markets abroad. A strong closing print above key levels suggests continuation tomorrow. A weak close could imply reversal. If gold closes above $5,550, $5,600, that suggests continued trend. That would reinforce analysts' views of persistent demand. Many banks are projecting strong price levels through 2026. If gold slips below session supports near $5,450, $5,480, that opens room for short-term sellers. Volatility often spikes near the close. Liquidity flows around settlement times can exaggerate moves. Major banks are increasing gold forecasts this year. Some now consider scenarios targeting gold near $6,000 Oz in strong bull settings. Others remain more cautious and see levels near $5,000, $5,400 by year-end. Many analysts underline strong fundamentals supporting gold. World Gold Council points to macro trends that favor gold amid risk aversion. Central banks are adding gold to diversify reserves. Continued risk sentiment holds gold steady as a hedge. Support, $5,420 support, $5,450 immediate resistance, $5,550 psychological resistance, $5,600. These levels matter for session-by-session price action. US dollar weakening intraday, strong safe haven flows, early break above resistance levels, macro data surprises to the downside, strong economic prints, dollar strength ahead of inflation, or employment data failure to hold support levels, strong economic prints, dollar strength ahead of inflation, or employment data failure to hold support levels. What price do you think gold will close at in the US session? Above $5,550 or lower? Comment your forecast for each session below. This is a personal assessment. It is for reference purposes only. It is not investment advice. You should research and consider multiple sources of information before making any decision. And remember, no one will be responsible for your decision except you. Remember, intraday gold forecasting is probabilistic. It's influenced by macro, technicals, and sentiment. But today's structure points to higher probability of continued strength. Thank you for watching. Be sure to subscribe for live updates.